When the stock market goes down, people turn to things like CDs, bonds, and gold. The price of gold is up almost 15% this year to around $3,000 an ounce. Wealth manager Jeff Sika tells Fox Business that the White House and the Fed butting heads this year will probably push the price even higher.
A lot of the reasons why gold is rallying the way it is there is an anticipation that President Trump is going to influence Jerome Powell to cut rates, which will affect the dollar. And you're also seeing a tremendous amount of central bank buying of gold, more so than we've seen in history. So I would say 3,500, it sounds like a lofty target, but I think there's a real high probability we're going to get there.
Now, I have no doubt that you guys have been getting inquiries about this. If somebody wants to make gold a part of their retirement plan, in what form do you buy it, and what percentage of their holdings should it represent?
Yeah, that's a good question, and I have been getting a lot of questions about gold and how to play that part of the market. I think the first concept I want to share with our listeners is that, to me, gold, it's really a helpful hedge against inflation and economic uncertainty. But to me, it's not really a growth asset. And if you look back at history, the S&P 500 is vastly outperformed gold, over the last couple of decades. And so we just want to make sure that our clients treat it like a strategic diversifier, not necessarily a core holding. And so what that means for most investors, you're probably wanting to see, anywhere from a 5 to 10, maybe 15% overall holding in gold. But once we get to that determination of what sort of allocation we should be looking at, there's a couple of advantages and disadvantages to the various ways you can own gold. One way I'd like to joke around with my clients is when they say, hey, what do you think about gold? I'll tell them, well, maybe you want to buy your wife or your spouse a nice necklace or, a piece of jewelry. Because really, the physical, tangible bullion, gold, it has a lot of issues. One being, where are you going to put it? Where do you store it? It doesn't pay any dividends. It doesn't pay any interest necessarily. So it's nice to look at, but sometimes unless you're thinking, end of days type strategy where we're going to be bartering, it's probably not going to be the most useful tool in your retirement tool belt. One area, and I know the firm uses pretty actively, is in the ETF space, where we're able to participate in the spot price of gold, but we don't personally own the physical bullion. But as you had mentioned, Nolan, that physical bullion is on deposit in some of in their storage facilities, right?
Yeah, and I know for many of you that are maybe watching this video on YouTube, maybe you're hearing this on our WSPD radio show, or maybe you just listened to it on Spotify. There's a great in-depth video that Chaz put together on the topic of investing in precious metals. If you go over to YouTube and check out our channel, America's Retirement Headquarters, hit the subscribe button. But in the search menu, type in investing in precious metals. There's a 19-minute segment that Chaz goes and dives a lot deeper into this particular topic. And as you're talking about, if we look at gold and, investing in gold, there are some, real advantages there. It can be an inflation hedge. It can be an asset that you can own. Tends to perform well when we have geopolitical uncertainty, which, it seems like we have a lot of the financial market turmoil right now. There's things that, can make that a lot of sense. But as you talk about with some of the negatives, unlike, let's say, a CD or a bond or something that pays a fixed rate of return, unlike a dividend-paying stock, one of the negatives with precious metals or gold is you're not going to get that, consistent income out of it. You talked about the storage. I can remember, when my kids were little, I had took them.
Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula, America's Medicare Associates, and Retirement Tax Partners. With Dylan Baker, Scott Kirshner. ARHQ.com is the website. Find out more about the team.
It's not as regulated as what the stock market is. So if you're within 5 years of retirement, I would highly recommend that you get a hold of our office and run the Retirement Team Action Plan. And what that Retirement Team Action Plan is, when you buy or sell a stock on a public market exchange. In addition to that, if you take that at home and let's say somebody puts it in their basement in the safe,
Q.com.
Besides getting it out once a year to kind of look at it, you're like, ooh, that looks good. Yeah. And putting it back in. You have issues of storage. You have issues of potential risk there. So like, again, if somebody came into the house and they stole that, if that wasn't on your
Almost like
home and
Bitcoin.
auto insurance, it could be money that's not protected. So you've got to think about a kind of a safe place. And you had mentioned, short term it's been going good. Can be an area to take a look at now. But if you look at it and compare it over a 20-year time frame, the stock market has proven to be, kind of more of the growth engine. Mm-hmm. We realize, though, that we're in this environment right now where, precious metals, gold specifically in your retirement can give you a little bit more peace of mind. And the portfolio that I'd like to highlight is called our all-weather portfolio. So within our all-weather portfolio, what I like about that portfolio is we added in 3 different investment components that really it's designed to kind of be here regardless of what the weather or the market is and the environment on Wall Street. So we've got about a third of the portfolio that's invested into equities. So we still have that equity component. Mm-hmm. Then we have a third of the money that's invested into managed futures. So again, giving us kind of an interest rate play, it gives us a little bit of exposure to commodities. And then a third of it is using some physical gold. And we have it, our main relationship that we work with is Charles Schwab. So some of these larger custodians allow you to have some of the gold exposure in these ETFs. The one that we have is physical gold. So you've kind of got that peace of mind having it held in a large custodian. There's good name companies like, Fidelity, Vanguard, Charles Schwab that allow you to have that exposure. When you blend those assets together, what you end up with is a risk score of 24 out of 100. So because of the fact that not everything zigs and zags in the same direction, giving you a lower risk. And I think right now with uncertainty that people have, looking at steps to lower their risk from just equities, in this type of environment could spell a good strategy. Still, at the same point, if we continue to have these runs either in equities, commodities, managed futures, gold, precious metals, that combination can do really well when you look at what some of the stats that are out there. So our all-weather portfolio could be a good solution.
Yeah, and what's amazing, and as an advisor, what I love about that is when Connor brought that to my attention, the individual securities themselves are like 9. When we talk about risk level, we think about it in terms of a speed limit. So if you're going 25 miles an hour, you get that there's very little risk there. Well, on the individual basis, each one of those investments might be in a 70 to a 90 somewhere in there. But when you add them together, Harry Markowitz in Modern Theory really shows through in that by adding risk, you actually ultimately reduce the risk of the portfolio. So it's that kind of outside of the box thinking, instead of just looking at traditional investments and saying, oh, well, historically 60%, if you want to be conservative, should be in bonds. Well, in 2022, folks lost 20% of their portfolio owning bonds. So It might be a little different now. You may need an advisor that's going to be a little bit more active, a little bit more responsive in these tumultuous times, because it's just not as easy anymore as to take a 10-question questionnaire and slam somebody into a 60-40 portfolio and say they're good.
It may involve more of a hands-on approach, and the good news is that it doesn't have to be your hands utilizing the skill set of a team like America's Retirement Headquarters, whether it is with their all-weather portfolio or something different as it pertains to your risk level and your beliefs and what you want to look at as far as investments go. That, again, goes back to that customized approach we were talking about a few minutes ago. So if you're curious, you want to know more about this or, maybe how to utilize gold in your portfolio, reach out, set up a time to speak with the team at America's Retirement Headquarters. That number, 419-794-3030, or you can go to the website and reach out there as well. Remember, that's arhq.com.